Good afternoon, good evening, everyone. Welcome to our presentation this afternoon. I am your host, founder, and big brain extraordinaire, genius, master of all I survey. Thank you for attending here today. If you would be so kind as to let me know, can everyone see my screen, hear my voice, the beautiful dulcet tones resonating deep from within my confident and always right body? Wonderful, thank you. We're here today to discuss why trading is so hard, why so many people are failing, and what you can do to stop trading like your grandparents and use modern predictive tools and modeling to trade proactively and be out in front of the moves, owning and mastering the right side of the chart. The right side of the chart. That's what we're focused on here today. And if all of those things sound great to you, you're in the right place. If you have experienced gurus that let you down, trading systems that were curve fit, worked for a while and then stopped working, if you've ever bought a tool where you thought the signals looked great, only to find out they disappeared and reappeared later, or they printed way too late to give you any kind of advantage. If you've lost between $10,000 and $30,000 on trading education and guru tools, or if you've blown out 1 or 2 or 3 accounts in the last several years, but you know that there's something going on, you're one layer of the onion away. You are in the right spot. If you're a futures, forex, equities, or cryptocurrency trader, you weirdos too are all welcome today to view our presentation. What are we talking about? The same thing we talk about every day. We won't be in the PowerPoint too long, I promise. We're the only company that's going to reach out to you and do the things I'm going to show you here today, because it is immeasurably hard. If you ever want to run and own a trading tools company, what I'm about to show you is not the way to do it. We give you the times and directions in advance for the most popular markets, futures, forex, and crypto traders are trading. I give you signals in each webinar for equities, and we come back week to week and review what happened. 2 days after I send out that email with that link and all of the histogram forecasts provided to customers on their own copies of the software, we come back together and see, did this thing work? Or did it not work? Did it work or did it not work? That's not the way to make money easily as a tool developer. And so we're going to talk about this page. We're going to talk about what was sent out to you on Tuesday night, what these histograms, these outputs that you can have and own and generate yourself represent. We're going to look at very volatile markets like crude, the brown, sweet, black, sticky stuff they pump from the depths, dinosaur blood. The near impossible market to predict, what with all of the wonderful pirates in the Strait of Hormuz, and this guy's launching missiles at that guy, and this dude in Russia's cutting off this, and rubles and lions and tigers and Russian bears. Oh my. We're going to look at this. But first, we need to understand, are markets predictable? That's the big if today. And to understand that, we have to look deeper and challenge the premise. Things that appear random, I've learned, are more often than not, not. And if you look at the messy nature of random things, you start to notice that there are patterns inside of it. Nature, humanity, anything linked to creation as a whole is not random. There's a whole discipline of science called chaos theory dedicated to showing that even inside of things like wind turbulence and storms and explosions, there's always a measure of organization. And so as we look around, this is one of my greatest examples to sort of frame what we're about to do. You look at this and your brain goes, I don't understand it. What is it? Is it a tic-tac-toe board? Is it a picture of my mother? If it's a Rorschach test, right? A psychologist would say, you see your mother in that? I don't know. My mother washing dishes? Weird, right? But inside of that randomness is information. The premise of random into information is that we need a tool to tell us. We need something smarter than us, more focused, more disciplined, better trained to see the patterns in the information inside of the data. So if we're looking at a chart and we're saying, hey, this doesn't appear very orderly to me, it doesn't look like a staircase, it doesn't look like a symmetrical anything, a piece of software going through that data would notice things that shouldn't be there. For example, if we tell a program, if we tell an indicator that's been trained for 13 years to find times where markets are likely to go up in the future, it can search for a behavior pattern. It can say in so many electronic words, right? Hey, I don't know if you know this, but a lot of times lately, the price of this market is going straight up at 10:35 Eastern. And when you and I look at that raw data, we can't see that. In fact, most of us don't believe that it's possible, right? And so nearly everyone, I say nearly because there's always a holdout, right? There's always someone who contradicts the mainstream. My wife, I believe, was blessed with a gift from the good Lord to contradict everything that I say. Anything. Her instant, near immediate reaction is usually, no, it's not. That's not true. And I think she is a humanoid pressure release valve for my brain from God to keep my extraordinarily large brain from exploding, from being right all the time, most of the time. No, it's not. But guys like Jack Schwager, who interviewed nearly 40 traders, walked away with this understanding that, hey, there's something going on here. These men and women that I've interviewed in these books, they can't be this right this often using the methods that they've deployed if markets are random. There has to be a modicum of order inside of them. Now, what we do that's really hard takes a lot of time, about an hour today, to convince some of you knuckleheads that this is going on. This is really hard. We send out a histogram for oil, the NASDAQ, the Dow, the E-mini S&P, Ethereum, the pound dollar, the euro dollar, the DAX, gold, all sorts of weird markets. And we'll talk about what this means in a moment. We give you the times and directions in an email if you're not a customer, in the hopes that you will be, by proving to you across Wednesday's market, across Thursday's market, that these times and directions were not only meaningful, but potentially profitable long term. Now, why is that important? Well, 90% of traders are losing 90% of their account within the first 90 days of opening said account. This has been true across the 13 years our company has been in business this May. The stat never changes. The only other place in the world where that many people lose that much money doing the same thing is a beautiful place in the middle of the desert. There's a place you can go if you're not particularly fond of your money, and they are happy to lump you in with all your friends, and 90% of you will lose 90% of what was in your pocket within the first 90 minutes of stepping into that casino. Make no mistake about what we believe. I believe markets are a cleverly disguised and rigged, heavily manipulated game. And the only way to win this game is to track the cheats who run it, to study the software of the slot machines, to look at the backs of the cards for marks. This is the only way to win at this game. Wired magazine, Russians slot machine. There's an article from 2017. A Russian engineer actually got a hold of a slot machine. They couldn't actually see the software. That's very encrypted. They can't go through it. But they hooked up the machine to a robotic arm in this article. And a computer measured every time the slot machine finished spinning. And they did this hundreds and hundreds of thousands of times. And Carl, you know what? The computer started to notice if you pulled that handle hundreds of thousands, millions of times, there were patterns in the code. And so they would send these people into casinos with cell phones and I believe Skype with a camera. And they would bet a nickel, bet a nickel, bet a nickel. And when the code came up, when the computer back home noticed it was time for the jackpot, their phones would buzz in their pockets and they would bet heavily, $15, $100. And they would do this earning up to $30,000 per casino and move on. They understood the game was rigged. They understood sitting there and randomly pulling some arm on a machine was not going to make them money. And so they studied the people who cheat, the people who own the machine. Now, if you believe that's happening, we can continue together. If you think markets are fair and JP Morgan is akin to a philanthropic organization, they're good people out there in the banks. That whole recession in 09 and 08, that was, anybody could have made that mistake. Yeah, they shorted the market they created, but hey, someone needs to buy the Volvos and the BMWs and the Lexus vehicles that good, hard-working automakers are producing. What does this chart represent? This is an answer to a question that we pose to a piece of software that you could pose to your computer and your software, your indicators on your computer. In essence, we asked the computer before we sent the email out to everyone on Tuesday, what is crude likely to do on Thursday? So remember, we've had this information now for 2 days. We've known about this for a while. You could know about this for a while. You could know the times for Friday and Monday and Tuesday and Wednesday of next week. Well, what do the times represent? This indicator did the same thing that the slot machine hackers did. It went into the historical data and it said, what times are oil markets being pushed up or pushed down? What times over the last several thousand historical bars are we seeing cherry, cherry, cherry? Jackpot, jackpot, jackpot. Is there any consistency in the historical data? Are there any regular irregularities? And so on a 3-minute chart, the program came back and said, hey, watch for selling pressure at each of these times. It's important to note that none of these times are derived from my heavily fortified guru big brain. They aren't pulled out of some magic proprietary black box. A monkey in a back room didn't throw a dart at a wall. Did you know there's a trader who bases his buying and selling on, I think it's a mouse that runs in and out of different rooms in the mouse house. And if it runs one way, he buys. If it runs the other way, he sells. And he's outperforming most traders. True story. There's no mouse house. But anywhere we saw 2 days ago, a white line with a time was another irregular regularity. The indicator was saying, hey, I found something. I have a radar ping. Those of you old enough to remember World War II movies, if you saw the great movie, The Hunt for Red October, where no one was shot on set. They were listening through earphones. They weren't Apple iBuds, I don't think. And you would hear pong, pong. When there's a time in crude over the last several thousand historical bars that the cheaters are cheating, pong, it shows up. And the computer goes, hey, get ready at 106. It's going to happen again, maybe. Does everyone understand what the histogram was communicating potentially to us as early as Tuesday for Thursday's crude market? Again, Somali pirates and Russian autocrats and oligarchs and yachts being seized and Javelin missiles and pipelines in Europe. There's no way this could happen. Or is there? Or is there? Well, let's talk about the difference between a signal and a setup. What we just saw were signals, times and directions. And we want to analyze and see what percentage of the time did those signals actually produce moves? Did the market actually go up or down, or we're around rather any of the times we were expecting them to? Raw signals. And then we'll look at a setup. In our case, it'll be a trend entry. When we go back and apply a filter to the signals, did the signals constrained by a very simple rule set, if this, go long with stops and targets here? Did it produce any kind of money? Was there an edge involved? Or was it just useless random noise with no benefit whatsoever? Ultimately, whether you don't like me or like me, you like the colors of the website, you don't like the colors of the website. Do I have a trophy wife and a Ferrari? How great is my backstory? Who did I vote for, not vote for? Ultimately, what we're looking for, members of the jury, is whether or not the tool we've built for you, which is entirely predictive, which allows you to be 100% proactive, as opposed to trading like your grandma, with the lagging indicators they were given when they were kids. I use a stochastic. My MACD is infallible. Divergence is the path to wealth, I say. We want to know if this provided an edge, because this is better if we know in advance when the thing is going to happen. Now, I promised we'd get out of the PowerPoint. We're out of the PowerPoint. Signal versus the setup. Here were the times that we were waiting for. Now, on my chart, I'm going to blow this up in a second, but I want you to see something. Adam, can you see here where it says 1624? I'm going to draw a very sexy yellow line that arches up and circles this signal at 1624. Can you guys see that? And then over here at 1530, I'm going to make another equally sexy and compelling line and enclose the 1530 signal down below. So step one towards freedom, a brave heart. We are Sparta, one battle. That freedom comes from step one, recognizing at this point I have no control over what happened. None. And so these are signals you've had since when? Tuesday. And they're on the actual CL chart. Now, come with me. Come with me, and you'll see a trading world beyond imagination. Look at the CL chart with me. Throughout the entire US and European session, these are the times that we were waiting for the poop to hit the fan. Pong! Pong! Let's get the easy ones out of the way, shall we? What happened at 9:15 today when the software warned us about a selling potential? What happened, Adam, at 10:09 when the market warned us about a selling potential? What happened at 11:03 when the market warned us about a selling potential? How about 7:30 at this pivot high, or the move down from 6:30 to 7:06? How about the move at the European Open here from 5:09 to 5:24? How about the little teensy move at the double top high for 127 when it dropped down? Not a huge move, but wouldn't it be nice for trades to go in your direction right away? Huh. Let's keep looking. What happened 2 days after I sent all of you crazies the signal at 9:03? And what happened at 7:54? And look at this low. Again, not a tremendous low. Look at this low at 11:18. Looks to me like a double bottom right there when it reversed and went up. We forgot the little guy over here at 12:30. Again, lunchtime move, not tremendously huge, but notice a little bit of heat before it went 4 and 5 times the other direction. At 106, what happened? Did it go immediately against you or immediately straight up like it did at 203? There's one that's not so great from 8:48 until 9:03. That one actually finished against you. Look how much. It's horrifying. It finished 9 ticks against you. So remember, a moment ago, I said we were going to look at the difference between a signal and a setup. But I have to ask the question. It's an uncomfortable question. What percentage of the time did the thing we were waiting for across the euro and the US market? What percentage of the time did the move the software warned us about on Tuesday, 2 days before today's market opened, did that move actually occur? Was it 0 to 50% of the time? 0 to 25, 25 to 50, 50 to 75, or 75 to 100? What percentage of the time did the signals produce a move that we were expecting? It's more than 25, right? It's not quite 100. It's probably in here somewhere, but I'll ask you this question. Would anyone in this room disagree that 60 to 70% of the time, minimally, the move we were waiting for actually occurred 2 days after I sent this to tens of thousands of people and carved a really deep line in the sand, daring everyone to come back in 2 days with me? Anyone here challenge what I'm contesting right here? That markets are not only, I'm sorry, I missed one, yep. They're not only not random, holy cow, that looks rigged to me. Holy cow, does it look like everyone was in on it but most of you. In case you're wondering, who's the guilty party in this? We don't have to look very far. Who's doing it? Ready? I'll show you what they admitted. Admitted this. What does it say? Manipulation of metal and treasuries markets. There's our word right there. Manipulation. And they're not the only ones. If we come and we just type DEUTSCHE, manipulation. Two former Deutsche Bank traders convicted of engaging in deceptive and manipulative trading practices in U.S. commodities markets. Oh, shock of all shocks. Look, they're still doing it. They pay the fine and they keep doing it. Now, do you remember what market they were convicted of manipulating that I just showed you? Which one? What's a popular metal people trade the future of? The one everyone likes to buy. The most popular metal. Gold. All right, well, check this out. Let's see if they learned their lesson. Let's see if they've lost their taste for market manipulation. That was one of the markets we sent the times out for. Huh. You're not telling me. Let's take a look. Oh my God. Steve, they're still doing it. They're still doing it. Side note, one day I sat down and I had too much time and I found out, this is a true story. I looked at JP Morgan's reported earnings and I compared it to their published finds. And Steve, I found out, this is a true story, that for every $3 they earn, they pay $1 in fines. For every $3 they earn, they pay $1 in fines. So I want you to imagine you go into an electronics store and you run out of the store with 3 high-definition Apple monitor boxes under your arm. You with me, Steve? You run out, you get to the door, you're in the parking lot, and the security guard grabs you by the arm and he says, "Hey, buddy, give me one of those back." What? You're only allowed to take 2 of those. Okay. How many times would you run into that store before the shelf was empty? And they run back into the store over and over and over again. Now, what's the difference between a signal and a setup? A signal is raw information. They're doing it in the big cities. All the bankers' kids are running into CVS pharmacies and stealing mascara. Oh, man. Stop trading with your grandma's indicators. Stop listening to the crazy pants guru who says he knows everything because he used to trade 95 years ago. Stop. A setup says we're going to apply specific rules to the trade. Well, wouldn't it be great if I could make the rules up as we go? Wouldn't it be great if I could do that? Well, again, I told you when we started, I was going to do it the hard way. And the hard way is this. You tell all the thousands of knuckleheads what the rules to the trade system are before the webinar. We'll also be showing how the signals can be traded. What? By using one of 2 simple entry rules. Here we go, ready? Signal with trend is the first entry rule, or the puncture trade. And I gave a link to a video that describes it exactly, and how we were going to use a 120 period exponential moving average for trend. And we were going to use a 1.5 ATR volatility stop. Now, trade number 1 is called a signal with trend. What does that mean? It means at 8:25, since Tuesday, we were expecting a move up. Pong, pong. On the close of that candle, Steve, we know what we're going to do with the simple system. I don't care how you trade it. This is what I think you should do. Go long on the close of that candle. We're going to put our stop 1.5 average true range values away from the low of that candle. 1 ATR is just on the outside of market noise. It's how far an average 5-minute bar is moving. 3 ATR values is considered by most market technicians a trend reversal. So we don't want to have it that far away. That's too much risk. If the time's going to work, Stephen, I'm going to put my risk just outside of how far one bar on average is moving lately. So this is my stop. And I put it on the other side of the line because I like feeling like there's a barrier between me and Deutsche Bank. Now, here's the cool thing. There's a window from 8:25 until 9:15, a window where banks have historically pushed markets higher lately, or we were led to believe by the software. So entering on the close of the candle, we hold it now. for $7. That's $700 per contract in one trade. Now, Steve, we didn't capture the full move, right? We didn't capture the full move. That's what we took. This was what was left. All right. We do the same thing at 6:45. If we enter at the close of the candle with a stop 1.5 ATR values away, we finish with $200 per contract. You see the difference between a signal and a setup. Now, at 9:15, we're above the EMA. No bueno. Yo no soy marinero, soy capitan, soy capitan. No truer words were said, am I right? All of these candles are above the moving average, and then something magical happens. Right here, this candle closes below the moving average. I want to live where the people are. Right here. A whole new world. When it closes below the moving average, I put my stop right above that crossover candle, just like I said in the video that I linked to with the histogram times. My entry is the close of that candle. I'm going to get out when? By the end of the window. My window for shorts was 9:15 until 10:50. That window didn't kick in until this candle closed below the moving average, which is lagging. I know it's lagging. And then that turns out to be this, which is $1,100 per contract. Now, Steve, do you notice what happens at this candle right here? I'm just going to point out that at the time, 10:50, do you notice what the banks do right away? Into the next signal. There's a little tiny retracement. Signal versus setup, right? I just want to point it out. They did what we were looking for. It wasn't a huge move, but it was a move. 11:05, signal with trend, big risk. I'll be the first one to admit that. There's your entry. There's your stop. You got $2,000 in the theoretical hopper, though. We enter. There's our window from 11:05 to 12:05. I'm walking. Yes, sirree, I'm walking till you come back to me. Boom, 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 ba-dum, boom. And the low is right here. That's $980. Huh. Same thing happens at 1:35. And this one loses money right there. You lost $90. So when I apply a basic rule set to the signals with a filter, what happens? Well, when the market was going up, we made money. When the market was going down, we made money. 200, 700, 1100, that's 2000, 2900, 28, 3000, a little under $3,000 per contract, or if you're trading the micros, $300 per lot. Now, who were we trading with? Who were our orders in line with? Who was our trading buddy today in gold? Bill in Sheboygan, who can't trade out of a paper bag? Susan in Albuquerque, who's lost 3 accounts and uses a MACD divergence volume whatchamajigger? No, we were trading with the banks. It's not the only market that does this, by the way. If you look at other markets like forex, here's the euro dollar on a 60-minute chart that we've been following for months. Does that market look rigged to you? We know the times in advance. There they are. Always waiting for us. Is the euro going up and down when the software is looking for those moves? Pong! Boy, it sure looks like it. Where else? Well, we've been talking about the E-mini S&P for a while. We've been tracking the moves. And if I take away all my little intermediate waves that we've been drawing in there, how accurate has the software been on a daily chart? This isn't a 5-minute ES chart now. This is big boy, big pants moves. January 13th, January 27th, February 7th, February 22nd, April 7th, a day before my birthday. Please don't steal my identity. May 5th. What do you think's going to happen between May 5th and May 18th? I wonder. I see this chart has something that looks like a stop run. It looks to me like they broke that low and everybody's panicked. If we interpret what happened last time, here's the total amount of time. Half of that time, let's say about a third of that time, 1/3, 2/3, about 1/3 of the time was a double bottom test. So if we look here, it's a lot shorter of a period of time. I kind of feel like over here is going to be another stop run, Stephen, and then a push up. But what do I know? If we come over and we take a look at other markets that you wouldn't think were possible to analyze, we could look at any one of a number of equities, including Twitter that we were tracking last week together. Elon Musk, Saudi Arabia, investment funds, blah, blah, blah. Boy, it kind of looks rigged to me, doesn't it? May 2nd to May 16th, so far from that signal on the open of that day, we've gone up $2.45. The end of the move is expected by May 16th. On Tesla, where all the money to pay for Twitter is coming from, Elon figured out, hey, Ford's got a lot of electric cars. GM's batteries aren't catching fire. Who's this Lucid guy? Rivian? May 6th is the next opportunity for a put. Now, I don't know if it's going to go that way or not, but I have a feeling Mr. Musk is going to tweet something, or we're going to have a little bit of news that makes all the Tesla bears excited. And I wonder which low they're going to retest. Are they going to trigger this one before May 12th? Are they going to trigger this one? Or all three of them? I think all three. We see that there's congestion down here on the daily chart between April 27th and May 12th. And May 12th is when everyone comes back to the party. Tesla on a daily chart. NVIDIA single-handedly powering the crypto revolution. All the graphics cards my kids want to buy in a warehouse in Romania somewhere, powered by a nuclear power plant from the Cold War. This is an area where there's going to be a possible push up. What happens in these areas? You have stabs, big candle wicks down where they scare everybody right before they run it up. NVIDIA on a daily chart. Apple's my favorite, Warren Buffett's child of choice. I think Warren Buffett would marry Apple if he could. We were looking for puts since May 3rd. There was a head fake right here, and now we're all the way back down. The next place for calls starts around May 12th. Apple on a daily chart. Alibaba's fun. I called this bottom with you so hard it was a Ricola commercial. Here's the bottom. May 24th. Look. But Steve, there's nothing to see here. There's no manipulation. There's no way we could have known that was the bottom. There's no way we could have known webinars earlier that March 31st was the next push down. No way. We were lucky. Absolutely not. The market you trade is not random. And so as we work our way back and look at the different opportunities that we had for buying and selling, if we come back to the NASDAQ this morning and we just look at the signals themselves and we apply a very simple rules-based strategy, there's no way you could have known when to go long and when to exit. There's no way you could have known when to go short and when to exit. There's no way you could have known when to go short and when to exit. The entire day, there was no way whatsoever, right? That's one of the two setups. I'm not even going to show you the signals with trend because I don't want to hurt your feelings. Some of you are very upset right now. Oh, I have to buy something else? No. You can trade blind for a while. You can do it the other way still. If you're a crypto trader, though, wouldn't it have been fun to trade Ethereum today to sell it between 9:15 and 10:05? Wouldn't it have been fun to sell it between 11:15 and 12:55, to sell it between 2:55 and 4:20? Wouldn't that have been a hoot? And by the way, I know the times in advance already. Everything to the right of this white line is a time that you can know up to 7 days ahead of time. And by the way, if you apply a trading system like this to these markets over time, and this is over about 900 executions, with a trend filter on the NQ from April, no, let me go back 90 days, from January 1st until April 7th, right? So last month, January, February, March, 4 months of NQ signals. You can kind of see the results for yourself. Did it apply an edge? Did it apply an edge? Did these buying pressure signals apply an edge? Here's results from a customer who studied this 2 years ago, April 2020 to May 2020. Is there an edge over time? Yes. Which way is the curve pointing? Upwards to the right. So when we analyze this crazy thing, the signals are moving in our direction 60 to 70% of the time. The setup is producing a statistically relevant edge that's profitable over time, hypothetically, right? So we have to go back to this screen. Steve, did we pass or fail? We set out to do something very... Donald Jacob's going to text you here in the chat box and give you some information on how to get in touch with him. He'll put you in the right direction. Jacob, can you chat with Donald real quick?
Yes, I can.
Go to the questions box. And this is where you interact with people like Stephen and Donald per the document. Did we pass the test, Stephen? Did the times we gave out on Tuesday for Wednesday and Thursday produce anything relevant, meaningful, and or potentially profitable 2 days later? Did they validate our assertion that the markets are not markets, but highly glorified, gold-leafed versions of casinos without free buffets and Elvis impersonators? Yeah. Boy, did we. And some of you are mad at me right now. Some of you are mad at me right now. Mark, very shortly, yes. And I mean that in a real way. It's happening, yes. Trading is ultimately what you believe it is. If you believe you can be successful looking at what happened in the past, right now, the volume just did this, the MACD just did this, my moving average just did this. If that's a path to success, then you don't need us. If you believe what I believe and what our customers believe, 5-minute window, Jacob. If you believe what I believe, that markets are rigged, that the people in power who do the same thing to us right on schedule, 2008, 2009, TARP money, trillions of dollars, we still don't know where it all went. They tried to sue to find out where the money went, and the bank said, we can't tell you because if you know, it'll undermine the credibility of the bank that received the money. 2020, COVID, $1 trillion+ released. Where'd the money go? Corporations. Who had interest in the corporations? The banks who had used the money from the Fed to buy stocks and equities. It happens over and over and over and over. And yet most of you, many of you, are living in a world from 1980, 1990. I trade a 38% retracement. My arm hurts. My first experience with trading was a company that believed the Fibonacci numbers were from God, and if we only traded 38% retracements, we would be wealthy beyond our wildest dreams. And you know what? It was the same people in that room every day, every week, every month. No one ever graduated. No one ever showed us a picture of their Porsche. Same story, 15 years ago.